At a time when our world faces an unprecedented energy crisis, the need for transformative solutions has never been more urgent. But within crisis lies opportunity. Welcome to the second annual Tribeca Future Facing Commodities Conference, held in the heart of Singapore. Over the next 3 days, we're not just discussing the challenges, we're diving deep into solutions, beginning with the technologies and resources that will pave the way to a carbon-neutral future. This is where the leaders of today shape the energy landscape of tomorrow, a gathering of minds ready to invest, innovate and inspire. Together, we will discover unparalleled investment opportunities, learn from the pioneers at the forefront of the energy transition, and connect with like-minded professionals committed to making a difference. The future is not just what happens next, it's what we create. Welcome to the second annual Tribeca Future Facing Commodities Conference. This is correct. The future isn't what has been, it's what we're making happening. And Andrew Hoare, who is our first guest up on stage for this segment, is going to talk about an innovation that is changing the world of shipping. So we started up going around the world. We had little canoes, we had sails, we had whale oil, and then we powered our way around at great cost to the hip pocket, now the environment as well. But all that could be about to change. And this is the gentleman that's going to talk about the revolution that is doing that. He's also going to talk about what's happening with Fortescue. So the title of this particular talk is Green Revolution, Navigating the Decarbonisation Frontier. Mr. Andrew Hoare is the Group Manager of Marine for Fortescue. And I'd like you all please to make him very welcome.
Well, thank you very much, everybody. I think perhaps I have a face for radio, but I'm sure if the food wasn't so good, people would be coming in much earlier. But good afternoon, everybody. It's a pleasure to truly be here to touch on Fortescue's efforts navigating the decarbonisation and energy transition frontier. My name is Andrew Hoare, as stated earlier. I'm the Group Manager for Marine at Fortescue. My journey began with Fortescue 2 years ago. I'm lucky enough to have this role and have the privilege of driving Fortescue's mission to decarbonise and be a leading green energy, technology and miner provider to the world. Since starting out as a small exploration company 20 years ago, Fortescue has become one of the largest iron ore producers. That also means we've become a massive carbon emitter. We don't shy away from this, which is why we're diversifying our business to become an integrated green technology, energy and metals company. Our mission is clear: to supply the world with green solutions it needs to decarbonize, because the only way we can reverse climate change is to stop fossil fuels now. Every day that we continue to release more emissions into the atmosphere, the worse the situation will get. The world needs a solution to fossil fuels, and that solution is green hydrogen. Fortescue emits more than 2.5 million tonnes of CO2 equivalent into the atmosphere every year, from our Australian iron ore operations and our marine vessels, otherwise known as Scope 1 and 2 emissions. We have a bold plan to remove all of these Scope 1 and 2 terrestrial emissions from our iron ore operations and provide to the world that we can run a capital-intensive, heavy industry operation with no carbon emissions and no carbon offsets, or real zero. And we're not waiting around. We're determined to reach this goal by 2030. This will remove 700 million litres of diesel a year from our iron ore operations and deliver significant cost savings. We also acknowledge our Scope 3 emissions profile as a result of shipping our iron ore and converting this to steel, primarily in Asian steel mills, which emits a further 261.5 million tonnes a year. We've also set a stretch target to achieve net zero Scope 3 emissions by 2040. Our entire company is completely dedicated to this mission, and our progress has been extraordinary. From announcing 3 of the world's first green hydrogen and green iron projects to FID, sailing the Green Car Pioneer to COP28, and trialling the world's first battery electric haul truck in the Pilbara, we have outperformed every target we've set ourselves, and we're just getting started. At the UN General Assembly in 2022, we announced a board-level $6.2 billion investment to turn our mining operations green by 2030. We're planning to turn off the diesel, turn off the gas, and completely shift to green energy. We've estimated that we'll need around 2 to 3 gigawatts of solar, wind, and battery storage to support decarbonising our iron ore operations. We have started this journey and will commission our first in-house 100 megawatt solar farm near our Iron Bridge operations midway through this year. These renewables will need to be supported by extensive transmission and on-site electrical infrastructure. Through our Pilbara Energy Connect program, we've constructed 320 kilometers of transmission lines to connect Solomon to Iron Bridge through to Port Hedland, and we've got more to come. We're committed to our Real Zero target, and this means running our iron ore operations when the sun is shining, when the wind is blowing, or when we've stored enough energy in our batteries. This also means flexing out our operations when the renewable energy isn't available. We call this demand response, and it will be a world first for heavy industry of the scale of our iron operations to achieve. Key to Fortescue's future is green iron and green steel. And to achieve this, we're working with our customers to develop the green solutions needed to decarbonising the steelmaking process, including the signing of an MOU with China Baowu Steel Group to work together on reducing emissions associated with iron and steel making. In our home base of Western Australia, we announced approval late last year for the construction of a green iron ore trial commercial plant at our Christmas Creek site, utilising the hydrogen that we're already producing on site via our green energy hub. This hub has a hydrogen refueling station running hydrogen buses. We've also fed ore into our low-temperature green iron prototype to produce small volume of metallic iron in the Balcatta. As part of our decarbonisation plan over the next 7 years, we'll be replacing our diesel-consuming mining fleet, including rail, with non-emitting alternatives. Around a quarter of our Scope 1 mining emissions come from our mining haul trucks. So we've been working with our zero emissions battery division, Fortescue WAE, to develop the battery technology needed to decarbonise our mining haul trucks. In early 2023, we finished constructing our first battery electric haul truck prototype, Roadrunner, which you can see here on the screen. Roadrunner brings with it several firsts, including the ability to fast charge in just 30 minutes. It is now undergoing testing at Christmas Creek in the Pilbara, involving the simulation of operational activities, including semi-loaded hauls and uphill starts. We're continuing to work in parallel on a green hydrogen fuel cell haul truck too, which is being built at our Hazelmere testing facility in Perth, before heading to site for operational testing mid-year. Our iron ore mining operation hubs are connected by 760 kilometers of rail, with our locomotives being a major source of carbon emissions. Right now, we're working on zero-emission solutions to decarbonize our rail fleet, such as our ammonia locomotive prototype, which recently achieved its world-first banking run. In simple terms, this means pushing the loaded ore train uphill for 100 kilometers. First pass was at 40% substitution for diesel, which is an extraordinary achievement. To decarbonize our rail fleet, we've also purchased 2 battery electric locomotives, which will play a productive role in our operations later this year. And during the last quarter, we deployed Australia's first operational electric excavator at our Cloudbreak operations, the first of what will be an entire excavator fleet capable of removing 95 million litres of diesel per year. Together with Libraire, we have converted an R9400 excavator from a diesel engine to an electric powertrain. This has been commissioned at our Christmas Creek mine site in Energy Hub. So why are we decarbonising? We're doing this not only because it's the right thing to do for the planet, but because it makes business and commercial sense too. For our capital investments, we will generate significant operating cost savings each year. As I mentioned before, these savings will come from the 700 million litres of diesel that we will no longer need to buy, and from the 50 million gigajoules of gas we will no longer need to burn. My view is that fossil fuel volatility is only going to increase from here. Price and availability are volatile, regulatory risks are higher and increasing. By decarbonising, we go to protect ourselves against that volatility. while also gaining access to capital markets. While electrification is critical, it can't achieve total decarbonisation on its own. Green hydrogen is a practical and implementable solution that will revolutionise the way we power our planet, decarbonise heavy industry, and create jobs globally. It is a solution to keep decarbonising anything you can't plug in. By developing green hydrogen projects at scale, we will tap into what will quickly become a $1 trillion per year industry, according to Goldman Sachs. Think about green hydrogen as a battery that stores green energy and allows us to transfer it all over the world to be used alternative to fossil fuels, for energy, for industry, and for transport. Let me simply explain what we do to make it work. We take renewable energy, hydro, wind, and solar, and transform green electrons into green molecules. We use electrolyzers to do this. In simple terms, we use the green energy to force water through a membrane which exists within the electrolyzer, and that splits the water into hydrogen and the oxygen. The hydrogen we produce is therefore made from green energy and water, so it is completely green. Once we've liberated the green hydrogen, we can sell it locally, for example, to the transport sector, or convert it to green ammonia, which is denser and easier to transport by ship. Then we can put it on a ship and send it to anywhere in the world. We recently announced final investment decision on our first 2 green energy projects, making us one of the first companies globally to have achieved this. Our Phoenix project establishes us as one of the most attractive markets in the world, brought about by the Inflation Reduction Act. The proximity to California, a primary heavy haulage trucking route, and the most progressive US state to adopt incentivized clean hydrogen, primes Fortescue well to deliver value into the US domestic market. This project will produce liquid green hydrogen from 2026, ramping up production to 11,000 tons per annum. In Australia, our Gladstone PEM 50 allows us to demonstrate to the market the quality of our proton exchange membrane, or PEM electrolyzer technology. This will be located adjacent to Fortescue's existing electrolyzer facility in Gladstone and produce up to 8,000 tons of green hydrogen per annum from 2025. The Gladstone PEM 50 will give us a pathway to control our supply chain of electrolyzers and position us as only of a handful of global manufacturers of industrial-scale hydrogen systems. During the last quarter, our Holmen project in Norway was awarded 200 million euros through European Union's Innovation Fund. We're also working with state and federal governments in Australia on our Gibson Island project in Queensland. We have some more work to do on that project to make the economics work, but if anyone can do it, Fortescue can. Our intent is to take our projects forward with the fiscal discipline Fortescue has shown for 20 years. And now shipping, my favorite topic. We see enormous opportunity for leveraging hydrogen-based fuels like ammonia in the shipping industry. If shipping were a country, it would be the 8th largest emitter in the world. 90% of global trade is carried across our oceans, and the industry accounts for 3% of global greenhouse gas emissions. The shipping of Fortescue's iron ore to our customers accounts for over 3 million tons of CO2 equivalent. We're moving fast to change that, having developed a dual-fuel 4-stroke ship engine to run on ammonia. In March 2023, we conducted the first shore-based ammonia fuel testing on a marine engine in Perth, Australia. Now, we're applying what we've learned into developing the Green Pioneer, the ship that you can see in the video. The demonstrator vessel sailed from its base in Singapore to Dubai for COP28, where it was truly the star of the show. Thousands of people visited the ship during COP, from Secretary John Kerry to the incoming IMO Secretary General and the President of Namibia. The Green Pioneer is a symbol to the world of the technology solutions needed to decarbonize shipping. The Green Pioneer is the world's first gas-fueled ammonia vessel, having achieved this notation with DNV and the Singapore Registry of Ships just last week. The vessel is perfectly suited to run on green ammonia derived from the green hydrogen produced from Fortescue's global portfolio of proposed hydrogen projects, a critical component of the decarbonisation trajectory for shipping. This vessel puts us on a pathway to reducing our Scope 1 and 3 emissions. We are proving to the world that it is possible to change. And as an aside note, you can visit this vessel, which we'll be showcasing in Singapore Maritime Week between the 15th and 19th of April in Keppel Bay. So please reach out if you want to see for yourself what we've achieved. Technology development is a major focus for us. Not only does it underpin our own decarbonisation journey, but it also presents a real growth opportunity from a commercial perspective. Our battery technology work at Fortescue Technical Innovation Centre in Killington, UK, for Formula E is world-leading. I was honoured to visit the facility there last week, and it is actually outstanding. Our digital software business, Fortescue Battery Intelligence, Elysia system, is highly sought-after technology. Green technology development is in our DNA. An example is Fortescue's Boost Charger, an in-race fast charger which will be used like an F1 pit stop. In a mere 30 seconds, the Boost Charger will deliver 4 kilowatt-hour of power, 5 times faster than a standard electric car charger. Our products are in demand the world over, and we're expanding our capabilities to build these products ourselves. We will soon open our purpose-built Banbury manufacturing facility in the UK, and just a couple of weeks ago, we announced support from the Michigan Economic Development Corporation for our Advanced Manufacturing Center in the US, where we first announced during APAC last October. We're investing $35 million US dollars to kickstart this facility, which is expected to become a major hub for Fortescue's production of automotive and heavy industry batteries, hydrogen generators, fast chargers, and electrolyzers. We're also fast-tracking a number of other major projects globally that will position us as a major supplier of green molecules to the world. From Australia, we will supply the Asian market. From Norway and Brazil, we will feed into the European market. And in Kenya, we'll enable the continents to produce essential green fertilizer. We don't believe anyone in the world is currently doing what we are doing at the same pace and scale. By getting our first projects underway now, our first mover advantage places us in the best possible position to realize the value the green energy transition presents. So how are we going to pay for all of this? Well, last year we announced the formation of Fortescue Capital, an asset management business which will raise third-party money from the institutional investors to invest alongside us in all the things that we have to do. We're very blessed to have Robert Cicero to lead Fortescue Capital. Robert and the team are based in New York, the center of the world's capital markets. They have a huge wealth of experience in this area, and they will help us fund all the ambitions that we have ahead of us. After having spent some time at COP28 and the World Economic Forum with top representation from the corporate world, as well as also presenting at the IMO in London last week, Fortescue has been in high demand. We are now recognized as a serious global leader in the green energy, tech, and metals arena, and as a leading green energy and tech light for Australia on the global stage. There was recognition the world must move faster away from fossil fuels to back in the decisions made at COP28, which was encouraging. It is clearer than ever that the decision makers from across the private and political spectrum are united in collaborating on the need to address global warming. Green hydrogen is not just an alternative. It's the purest source of energy the world needs. The question is not whether it will become the next global energy form, it is merely a matter of when. Thank you very much.
I just wanted to apologise just briefly because I had a beautiful intro that we discussed yesterday and talked about, and I've been having a few computer issues up here, so I'm going to blame someone else except myself, but you picked up wonderfully despite my subpar introduction, so thank you very much. It was a great talk. Thank you. Okay, cheers. And Melanie Leighton, I'm afraid that your introduction is going to suffer a similar fate, but come up here because we know you're fantastic and fabulous. This is a geologist with a very impressive history. She obviously started in the world of geology, loving rocks and loving exploring, and she's moved through her 20-year career and added numerous titles to her name, and also done a master's along the way in the world of business and finance. So she's very well credentialed in the role that she currently holds, that she's representing here today is the CEO for Titan Minerals. Now, there was a lot of conversation. Are you looking for something as well, a laptop? Do you need something?
No.
No, that's okay.
A clicker?
Between the two of us, just you and your knowledge that's going to be up there. But gold is the way to go. And you've had some really exciting news that I'm sure you're going to share with us, which is just going to grow the prospects bigger and bigger, which may make our interest in what you have to say today even bigger as well. I'm really excited by it, and I'm looking forward to hearing what you have to say. Would you please make Melanie welcome, everyone?
Thanks very much, Christy, for such a glowing introduction. It's a pleasure to be here, and thanks to Vertical Events for putting on such a great conference. It's great to be here in Singapore for it. So I'm going to take you to a destination which probably many here are less familiar with. Titan Minerals, we are developing copper and gold projects in Ecuador, and we have got a very advanced development-ready gold project with 3 million ounces of gold, and some really good exposure to large-scale copper potential at our projects in Ecuador also, and just a few of our geologists on the front cover there for just to introduce you to some of the team that are doing such a fantastic job at the projects over there for us. Yeah, the investment proposition, like I said, really is exposure to large-scale copper and gold. We've got 4 100% held projects in Ecuador. We're down in the south of Ecuador, and on the image on the right there, you can see I've added in the Fruta del Norte Lundian gold operation and the Cascabel Solgolds operation in the north for a little bit of context as to where we are in country. We're very, very pleased to have land holding in the prospective Andean copper belt. The same geology is in Chile, Peru, Ecuador and Colombia, although Ecuador is relatively immature in terms of an exploration and mining sense, and that represents a fantastic opportunity because, you know, the same style of deposits certainly are there, they just haven't been found yet. So to have a starting point for us of, you know, plus 3 million ounces of gold in resources, 22 million ounces of silver, JORC compliant resources that we completed in July last year, a really solid foundation for us to build upon. And I guess, you know, our Dynasty project is our most tangible asset, and then exposure to all of the copper porphyry upside at our other exploration projects is kind of like a free kick for investors at this stage. So we do believe there is significant potential to rapidly grow the resources at Dynasty, and for significant, you know, copper discoveries at our copper projects as well. So as I said, we're in Ecuador. It is an emerging jurisdiction, but we do see, you know, we do enjoy really good support from the government there, both in a permitting and exploration investment protection sense. So really good environment for foreign investment into exploration and mining in Ecuador. We've spent several years at our projects fostering really strong relationships with our communities. That's given us the social license to operate, and we've got really good access to do the exploration that we need to do across our projects. So, you know, we're really well placed in that regard. The board and management team have got the skill set, both in the exploration and the mining sense, you know, to do the right thing and to do our best by these projects, which is certainly what we're doing. The gold price is really in our favour right now. I know that there's been a disconnect probably in recent years. The gold price has been travelling quite well. Junior explorers have been significantly undervalued, and we're certainly no exception to the rule. So we'd like to see that we'd be able to capitalise on that increased gold price, particularly with the project that we do have. The contained resources sort of imply an equivalent enterprise value of around $10 US an ounce for gold for our resources, which is clearly a disconnect with our current market cap, which is circa sort of $55 million Australian. So significantly undervalued and great opportunity for us to, you know, increase the share price. A little bit more about the capital structure. As I mentioned, we're around $55 million market cap, circa 3 cents a share. We've got really good support from our institutional investors, Tribeca being one of them, hence us being here, and a number of quality funds and high net investors that are certainly, you know, very supportive of everything that we do, and continue to support us in our exploration and development of the Dynasty Gold project. A little bit more about the projects and what we're actually doing at this stage. Dynasty, it's largely about exploration and resource growth. We've just expanded our work programs into some new highly prospective areas through reaching agreement with landholders. So, you know, that's a big success for us and opens up a whole world of opportunity for growing the resource. And we are targeting a resource update for the second quarter of this year, and that will be both resource growth and somewhat resource conversion as well in terms of upgrade from inferred to indicated. We've got a pre-scoping study and metallurgical test work underway, which we hope to have the results back for Q3. And then outside of that, obviously progressing our large-scale copper projects. And we have got all permits in place for drilling our high-priority targets there. And we are seeking and well advanced with strategic partners and discussions with them to fund our exploration at our copper projects. A little bit more background on Ecuador itself. Sorry, it might be difficult to see. It's not too bad actually. Just shows where our projects are in relation to other, projects in terms of, I guess, the scale and the pedigree of projects that surround us. Most of our peers are either TSX listed or majors. As an ASX explorer in Ecuador, we're probably one of the very few. So I guess we represent really good exposure to the opportunity in Ecuador for those that are interested in investing in ASX stocks. And I'll just bring to your attention on the right of that slide some of the more recent transactions in terms of investment into exploration and mining in Ecuador, and most recently Hancock Prospecting through their subsidiary Hanrine offering to invest US $120 million in exploration in projects in Ecuador to acquire 51%. So clearly significant support for the opportunity there in Ecuador, and a number of the majors have clearly recognised that and are moving in and taking up strategic land positions and joint venture positions within junior explorers there. The government, again, like I said, it is an emerging mining jurisdiction, but the government is very supportive of mining. They do see it as part of their economic revitalisation. They're offering fast permitting, low tax rates, investment protection agreements for both exploration and mining. President Noboa attended PDAC in early March, and he got up and presented to the crowd. And one of the key takeaways from that message was that I guess his environmental ministers have been tasked with a KPI of approvals in terms of permitting for exploration and mining. So there is to be no roadblocks in the way of that. So it's really good to know that we've got that support. And then, outside of that, there's a number of incentives in terms of low tax rates and the like within Ecuador. So certainly we're seeing it as a great place to operate. At the moment, there's two major mines in operation in Ecuador, both the Fruta del Norte operation, Lundin Gold, and the Mirador copper mine. They currently represent about 1% of the GDP for Ecuador, and I know that the government are targeting 10 to 12 mining to fulfil 10 to 12% of GDP. So you can clearly see what the government are trying to achieve there, and hence why all of the majors and ourselves are in country, because it is a real opportunity to take advantage of. Zooming in on our projects, I guess our three main projects that we've been working on since we acquired them in 2020. The Dynasty Gold project, definitely our flagship project. We have the resource that we've established. It represents probably about, we believe, 50% of the potential of the project. Half of it has been effectively explored. The other half is yet to be done. The Linderos and Copper Duke projects both represent significant exposure to large-scale copper, and we have been systematically collecting all of the foundation data sets, the geophysics, the 48-element soil geochemistry, the mapping and the trenching, to progress us to the point that we've got some really high conviction targets there that we are set and ready to drill. Copperfield we haven't quite got to yet. We've got our hands full with our other projects, but that does represent even further exposure to both copper and base metals and precious metals also. Zooming in on Dynasty itself, we completed a mineral resource in July last year. The image here, it shows you the distribution of the resource. Serra Verde, which is in the southwest corner, is close to 2 million ounces, so the bulk of the resource is there, and it is at a slightly higher classification in terms of confidence. When we acquired the project, there was 30,000 metres of drilling completed, diamond drilling. We since completed an additional 36,000 metres of drilling, diamond drilling again. We've completed QA/QC validation. We've built a 3D geological model. We're working on a structural framework, and it is an epithermal style deposit, so understanding the level of emplacement and the erosion level across the 9-kilometre corridor is very important. And when you understand that, you really know where to target, your resource growth and your drilling. So that's certainly something that we've been working on, and our chief technical advisor is on site right now, helping the team put that together. And once that's completed, we'll be really well placed to target even further resource growth. But as you can see from the bar graph on the right, the bulk of the resources, more than half, sit within the top 200 metres, and then 82% sit in the top 400 metres. So the mineralisation extends from surface. The grade averages 2.23 grams per tonne gold, 15.7 grams per tonne silver, so really quite a high-grade deposit to be extending from surface. And within that, there is a high-grade core, roughly 2 million ounces of the deposit is, grading 3.77 grams per tonne gold. So certainly a lot of ways that we can cut this deposit in terms of mining type, both open pit and underground scenarios are possible. And then the grade cut-off can certainly be played around with to optimise the economics of the project. Late last year, we completed some resource growth drilling into our Papayel prospect, which was in the northeastern corner of Dynasty. What we were able to demonstrate is that through our boots on ground exploration, we were able to uncover new vein systems. So the mapping and the soil geochemistry is vectoring us to brand new vein systems that have never been drilled before, and we were able to drill that, and we will be adding that into the resource update. And then outside of that, we've completed quite a bit of trenching. So you can see in the, where's my pointer? This is the current indicated and inferred resources at Papayel, supported by drilling and trenching. And then outside of that, we've done a number of trenches both to the north and to the south. And particularly there's a zone here of 700 metres to the south of the existing resources that represent a real opportunity for growth. And our geologists are on the ground there right now, expanding the mapping and surface geochemistry in that area. So not only do we have trenches, there are just a couple of historical diamond drill holes that were completed in the early 2000s that also confirm the existence of gold mineralisation to the south. So it doesn't matter where we go at this project, we seem to keep finding more gold. I guess the focus for us now is to work out where the best parts of the project are to direct our drilling to. So it's boots on ground exploration for the coming few months before we get back into drilling again. Look, I've touched on this already. The communities are really important to us. Reaching agreement with the communities is important, and we've certainly done a lot to forge a strong relationship with them. And we offer, employment, training, social initiatives, some infrastructure development. For us, it's a very low cost. For them, it makes a big difference to their daily lives. So very mutually beneficial relationships between us and the communities, that's for sure. Moving on to our copper projects, the Linderos copper project is our most advanced. We completed some drilling there in late 22, demonstrated copper porphyry mineralisation from surface, grading about 0.4% copper equivalent. Since then, we have completed, so the drilling is in here, Copper Ridge, which is about a 1 kilometre footprint in terms of drilling. And then since then, in July last year, we completed an eyepiece chargeability survey, which actually tells us it's more like a 2 kilometre footprint. It's mapping the phyllic, the pyrite alteration. So really exciting for us, and it tells us that most of our drill holes ended in mineralisation, so it tells us there's potential both at depth and laterally at this project. So very exciting for us. Copper Duke, again, another large-scale copper project, very early stage. We've collected soil, geochemistry, geophysics, mapping and the like, and it tells us that there's a 7 kilometre porphyry footprint. The diorite host has got the same geochemical signature as that which hosts all of the global tier 1 porphyry deposits. Age dating is confirmed mineralisation to be Paleocene, which tells us that it's the same age as the megaporphyries in Peru. So multiple data sets pointing us in the direction, indicating that this really could be one of the big ones here. Touched on this already, and I'm running a little short on time, but I guess environment, of course, we respect it. We always do the right thing. Communities, we've touched on that. In terms of big ideas and technical excellence, we like to think that we're doing things that a major would do, but on a junior budget. We have a couple of key technical advisors. Dr. Scott Halley helps us with the chemistry. We've had Steve Garwin to site. He's the porphyry expert. So we're getting some, really key feedback and strategic input from key technical advisors, and we're certainly taking that on board with our exploration approach, and like to think that we're doing things both technically and corporate governance as best as we possibly can. Next steps and upcoming milestones, just to recap, it's all about growing and developing Dynasty, and then securing that partner to progress our copper porphyry projects. And I think, representing great exposure to copper and gold at a time when it's the right time. Thank you.
Thanks, Melanie. Thank you. Gee, I'm being beset with technical issues, aren't I? Or are you cutting me off up the back there, James, on purpose, are you, lad? That'd be right. All right, up next, St George Mining. They are a diversified battery metals explorer with an exciting growth outlook, positioning themselves for high multiplier returns. And they count amongst their shareholders some very large battery manufacturers who are eager for raw materials so that they can amp up their own production needs. John Prineas is their executive chairman. Now, he is a man with a very interesting skill set. He spent a large portion of his career utilising his leadership and his industry to identify emerging market trends and secure the backing of high-quality partners to establish a portfolio of very exciting exploration companies, and St George is one of them. Will you please make him very welcome?
Thank you very much. Thank you, Chrissy. Yeah, I'm excited to be here at the Future Facing Commodities Conference. We have a business model in Future Facing Metals. Our clear business strategy is to create value through the discovery of future facing metals. Our flagship commodities are rare earths and lithium. We've already made discoveries in those commodities. We've also got copper and nickel exploration assets. We're in Western Australia, Tier 1 mining jurisdiction, as you all know, #1 address for hard rock lithium. It also is a pretty globally significant rare earths producing state, and also some emerging niobium and other rare earths deposits there. On the corporate level, we think we've got something that distinguishes us from other junior mining companies. We've attracted some of the biggest battery players in the world as shareholders. Shanghai Jason, world's #1 cathode precursor materials manufacturer, is on our register and our biggest shareholder. Amperex Technology Limited, #1 in the production of lithium-ion batteries by reference to the number of battery units produced, has also invested in our Lithium Star subsidiary, and Sunwoda Electronic, another globally significant battery maker, is on board as a shareholder. Your smartphone, iPad, laptop has probably got an Amperex Technology Limited or Sunwoda battery in it. That's how dominant these guys are. We think it's the right time in the cycle to be investing in St George. Our future-facing metals are also the kind of things that can deliver enormous value to our investors. That chart that you can see there is called the Lassonde curve. It was devised by a gentleman called Pierre Lassonde, who built his company Franco-Nevada into a $30 billion giant. It's basically a royalty company, so it earns royalties from mineral discoveries. But he's tried to map the life cycle of a mineral discovery. At the bottom here, low value, this is where you've got your basically moose pasture and you're trying to work out what it is. When you make a discovery, that's when the massive value is created for shareholders very, very quickly. When you get to the top and you start developing, well, it gets a little bit boring, so you sometimes lose value. You've got to fund very big capex. Where is St George? St George's is this point right here. We have a number of exploration projects pre-discovery, but we've also had some with a discovery, which we're drilling out and trying to establish the size of the resource. So we think we're at the very best point of the life cycle to create value for shareholders. One of the most respected journalists in Australia, Barry Fitzgerald, just last week named St George as one of the top 3 companies to be watching in the junior space as the lithium market rebounded. So very nice from Barry. Our projects are in WA, as I mentioned. Rare earths, we've made a discovery across a 7-kilometre strike, and we've still got 70 kilometres of prospective lithology. So that's at the Destiny project there. We've also got a number of other lithium projects in WA. They're mostly in the lithium super province. All those red label projects on the map are our St George projects. The yellow projects are established lithium mines or large lithium deposits. There are more producing lithium mines than anywhere else in the state in this super province area. That's where we have our projects. So we think they're a good location and good opportunity to make a discovery. We've got a large land holding, over 3,000 square kilometres already granted, and quite a bit more in application. So it gives us multiple opportunities to create several discoveries. The Destiny project, we just announced on Monday our latest drill results. They're looking pretty good. We've got the grade. It's a clay-hosted rare earths deposit. Grades up to 5,125 ppm, total rare earths oxide. That's very, very good for a clay-hosted deposit. The scale looks like it's there. So far, it's across a 10-kilometre strike and still another 70 kilometres to drill. The thickness is also telling us there's volume there. The mineralized intercepts are up to 100 metres thick. The high-grade intercepts are about 42 metres thick. So that's definitely talking to volume. And more importantly, the quality of the rare earths is very good. The magnetic rare earths, which are the ones used in clean energy applications, EV engines, wind turbines, we've got about 20% of that, which is a very good average. So it's a really good discovery, we believe. We've got to do resource definition and exploration drilling, and also do the metallurgical test work to confirm that you can monetize this. We'll be doing more work about that this year. Don't please try and read those mineralized intercepts, they're too hard. But the key point from here is the consistency of the grade and the thickness of the intercepts. That's telling us that there's a fairly coherent mineral deposit here. We have to continue the drill out to confirm that, but so far it's really stacking up as a potential rare earth deposit for development. Just a quick snapshot of some market dynamics in the rare earths space. As you probably know, China is the #1 in the production of rare earths, far and above everyone else, and also has the biggest reserves. There are other countries with reserves, Vietnam, Russia, it's not particularly good, and Brazil. So there is a huge interest in diversifying the supply chain. So we're seeing good support in Australia for rare earths discoveries, and obviously you're hearing more about the Brazil ones as well. So it's a good place to be, we believe, to create value for shareholders. Mount Alexander is our flagship lithium deposit. It's in what we call a new lithium province. A company called Delta Lithium has made the discovery there and established close to a 15 million tonne resource. We have similar exposure to the Copperfield granite. So that is Delta Lithium there. This is St. George here. And this is the Copperfield granite, which is the source of the mineralized pegmatites that are producing the spodumene. They've already got their deposit established here. We believe we've got similar kind of exposure and potential here. Other big players in the region are Hancock. Gina Reinhardt, Australia's richest person, is joint ventured here with Legacy Minerals, Legacy Iron Ore, which is backed by the Indian government. And IGO is exploring down here in joint venture. So we're surrounded by very major players in the battery sector. I should add that Delta Lithium, as major shareholder, is now Mineral Resources, which is also one of the strongest players in the lithium sector in WA. So it's a very, very good address. We've made a discovery and we just got to continue finding the higher volumes of it. We've got more than 500 pegmatites to explore. So we're doing analysis of those. There is lithium in the surface, but more importantly, the expert geologist will tell you to look at something called the potassium to rubidium ratio. If that is a very low ratio, it's almost certain that you've got spodumene producing pegmatites. We're doing that at the moment. We'll be announcing something very soon. I think we're seeing some really special ratios that telling us it's almost certainly somewhere there is going to be spodumene. So we're going to have some really exciting drill targets, I think, this year to go and test. We already know there's high-grade lithium there, 1.8% confirmed in the drilling that we did last year. And we've also got some very thick pegmatites, 121 metres, so that's similar to the stuff you're seeing up in the Pilbara with Azure and Wildcat. It wasn't a highly mineralised intercept, but it was fractionated. So fractionated is the first phase of getting to lithium mineralisation. We just have to continue that search and hopefully we'll find both the high grade and the thickness. Plenty of drilling to come in 2024 to extend that project. Lithium Star is a subsidiary we formed last year. We acquired 7 lithium projects in that company. And we joint ventured it with Amperex Technology Limited. We sold 10% of that company to Amperex in exchange for $3 million. So that's given us the money to go and explore in that company and hopefully make that discovery to take that project further. The 2 key projects that we're really excited about are Myuna Rocks and the Bungonia project. That map shows you the Marina Rocks project. At the bottom there is Mount Cattlin, owned by Allchem, or I should say that's absorbed into Arcadium now, the new company. So that's a producing spodumene mine. We think that belt goes all the way up into our ground as well. We'll be doing our first round of drilling there later this year, or later this quarter. So hopefully we get some good results there and gives us confidence that we're on the right track. The Agena project is an early base metals project. It's on the western margin of the Yilgarn in Western Australia. Most people have tended to go east into the desert to find new discoveries. And everyone forgot about the western margin. That's where Chalice made its big discovery at Gonaville on the western margin. So we had a look to see if there's any forgotten areas on the western margin. We found this area up near Geraldton. There has been historic mining here for lead and copper and zinc. We found an area that was undercover, was never touched by the prospectors, but has some very interesting magnetic features, up to 20-kilometre long magnetic features, which we think are intrusions, which could be mineralised intrusions. We did our first round of drilling late last year. We did hit base metal mineralisation, high grades, mostly lead and zinc, which is not what we wanted, but it's telling us that it could represent a halo around a copper or zinc deposit, nickel deposit. So we're going to go back and drill the best of the magnetic anomalies this year, and hopefully we get what we're really looking for. A quick corporate snapshot there. Our market cap has fallen, unfortunately, with the fall in the lithium price of most of our peers. So we're pretty cheap at only a $20 million market cap and 2.2 cent share price. Our top 20 is pretty solid now with our major shareholders on board. Management has got a lot of skin in the game as well. Our board is important, but even more important is our technical team. They're the ones that are going to deliver that discovery that's going to re-rate us. Julian Hanna is a gentleman that some of you might know, had enormous success with Western Areas, got sold off to IGO, but he made it into the #1 nickel sulfide producer in WA, and then went off and made big copper discoveries with Mod Resources in Botswana. So he's on our team. Charles Wilkinson was the head of nickel exploration at Western Mining, and also the chief geologist at Western Area, so a very experienced geologist. And Dave Mahone is a younger geologist who worked with those gentlemen at Western Areas, and is the robust guy that handles all our field work. So we think we've got a very strong technical team with a track record of discoveries. We're putting them to work with our money, and hopefully they'll make the discovery for us too. That's the presentation. We've got multiple opportunities for discovery and creating value for shareholders. We've already made some discoveries, and this year we're going to be adding to them, and hopefully we get re-rated in accordance with that Pierre-Lassonde curve that I showed you. Thank you very much.
Thank you very much. Next up on stage is Sarytogan Graphite Limited. They're developing their giant and exceptionally high-grade namesake deposit in central Kazakhstan to service the rapidly growing battery anode market and some other advanced industrial uses. This is Sarytogan's Managing Director, Sean Gregory. He's a geologist, he's a senior mining executive. He has more than 25 years of experience in minerals exploration, development, and over the course of the next 10 minutes, he's going to provide an update on the pre-feasibility study, which is due in Q3 this year. No pressure. Please make him welcome.
Thank you, Chrissy. Thank you, Chrissy. Good afternoon. Sarytogan graphite is disrupting graphite anode supply. And the reason I say that is we have the world's highest grade graphite deposit and the world's second largest graphite deposit. Those two attributes give us the benefits of very low mining costs. We're able to take those very low mining costs, and we've actually been able to demonstrate that not only are we very low mining costs, but we're also ultra high quality. We've managed to achieve 5 nines purity, 99.9992% graphite or carbon, which is actually many times purer, about 50 times purer than the specification required for batteries. It's opened the door for other advanced industrial uses for us to explore. We've made uncoated spherical graphite, and just 3 weeks ago we made our first lithium-ion batteries using our graphite from Kazakhstan, and pleased to report that the performance of those batteries was superior to the current synthetic graphite used in lithium-ion batteries. Our project's in Kazakhstan, and I'll tell you about Kazakhstan. It's a fabulous jurisdiction for mining, and we're very pleased to be up there operating. As Chrissy mentioned, our pre-feasibility study is due in about 3 months' time in Q3, and that will quantify what we believe will be pretty outstanding economics for this unicorn project. So, of course, it all starts in the ground with the resource, and we've drilled this out to an indicated mineral resource. As I mentioned, world's highest grade, world's second largest. What makes our project different and special is, of course, the geology, and it's been formed by contact metamorphism rather than regional metamorphism. The pink granite has come in there and cooked up our graphite, but just cooked it up to the Goldilocks zone, where we've managed to get the very high grades, but importantly, our flake size has stayed microcrystalline. If you go back 5 years ago in the graphite industry, it was all about flake size. Everybody wanted jumbo flakes because they have uses in industrial uses and achieve a small premium. But if you want to get into batteries, you've actually got to go the other way, and you've got to go ultrafine, and that's exactly what we've got. Now, this slide is about mining economics 101, and we say in mining, grade is king. And when you're the world's highest grade, that gives you a tremendous head start in your mining operations. These two cross-sections here are cross-sections of mining pits, and the pit at the top there is pit A, which is perhaps a typical graphite mine with a grade of, say, 10% carbon. But to get that ore out, you need to move the purple material, which is waste rock, at about a 3-to-1 strip ratio. The other mine, mine B there, higher grade and almost no waste to move to get to the black high-grade graphite. So it actually turns out if you're triple the grade and a fraction of the strip ratio, that has a multiplying effect, and the net effect of that is our mining costs per tonne of product will be about 1/10 of that typical mine. So what do we plan to do? We plan to build our graphite mine in Kazakhstan. Now, as Aussies, we've got a track record of building big mines. We love building big mines, that's what we do. But we're actually going to take a different approach with this opportunity. Despite having such a large ore body, we're actually going as small as we can, which is difficult to do. When your grade is so high, there's only so small you can make the project. But we're going to make about 50,000 tonnes of graphite concentrate each year, and we're going to send those graphite tonnes into 3 different markets. Initially, a lower value product for industrial uses, for things like steel refractories, for rubbers, for brake linings, for greases and lubricants. So that's one product we'll make. We then go through thermal purification to get it up to those tremendous high grades of 99.999, and then we spheroidise it. The spheres go into the batteries, and that will achieve a premium price, and that's the big growth market. But the really exciting thing is because our fines are so high grade, we can push that material into advanced industrial uses. It'll have a use on the cathode side of the battery, and now that we've achieved that 5 nines purity, it also opens up the nuclear opportunity for our project. But batteries, of course, are the big growth market, and that's what investors are excited about, and that's what we're excited about at Sarytogan. We have made our first lithium-ion batteries just 3 weeks ago, and we demonstrated the performance of those batteries to be, in fact, superior to the synthetic graphite, which is the present incumbent going into your electric vehicle batteries as we speak. We've got more battery testing to come, which will be exciting. We're moving from what they call uncoated spherical graphite to coated spherical graphite, which will improve the performance even further. Now, turning to the market. The market, of course, in electric vehicles has been very exciting, and there's been a lot of strong growth. And I guess from an investor context, there was a bit of a bump in the road last year with lithium prices and the like. But this slide is to illustrate that the fundamentals are still exceptionally strong. This is actual data, month in, month out, of electric vehicle sales globally, continuing to grow at about 37% year on year. And of course, anode production growing in a corresponding fashion. In your electric vehicle, of course, you need graphite. Graphite is the anode in the electric vehicle. In all batteries, it always has been, it always will be. And regardless of your battery chemistry, you always need your graphite. Furthermore, if you're looking to reduce the CO2 footprint of the battery, you need to have target graphite as the best opportunity to get your CO2 footprint down in building that battery. And the way to do that is to move from synthetic graphite to natural graphite. Go back a few years ago, it was around about a 40-60 split between natural graphite and synthetic graphite. Last year, with the big tonnage requirements for electric vehicles, we actually had to turn on a whole bunch of synthetic capacity in China. And that does the job, but it comes at a cost. It's more expensive, requires huge amount of energy, heating this material up to 3,000 degrees, holding it there for 3 days, letting it cool down for 3 weeks. Huge amounts of energy, and of course, with energy comes CO2 footprint. Additionally, the performance is inferior to natural graphite, and we've demonstrated our material to be better performing. So many forecasters believe there will be a shift back from synthetic graphite back to natural, and what that offers us the opportunity is to capture a bigger slice of a growing pie. Benchmark Mineral Intelligence say that that market is growing such that it's going to go from 1 million tonnes per annum to 7 million tonnes per annum by 2035. To do that, the world will need 97 new graphite mines. As I mentioned, we're building a small mine in the context of our ore body, which will be one of those mines at about 50,000 tonnes. But given the size of our resource, we can build many of those mines. So with success on the first mine, we can expand and expand and expand. Geopolitically, it's a really interesting space. The EU battery passport, driving that green behaviour, motivating change. Every battery will have a passport. You'll be able to tell where your raw material came from. China dominates graphite, and of course we offer an alternative to that. Our project is in Kazakhstan, located right in the heart of the continent there, and we can send our graphite anywhere. As I mentioned, China has their own graphite, but we will be looking to face Europe as our potential customer. We're not the only people up there. It's a wonderful place to go mining, a great mining jurisdiction. The world's biggest uranium producer, number 12 in mining, number 13 in oil and gas. Power costs are going to be a big part of what we do with thermal purification. In fact, in Kazakhstan, 4 cents per kilowatt is the power cost. That is going to give us a tremendous competitive advantage. All of that is feeding into our work program. And as I mentioned right at the start, we are going to land our pre-feasibility study in about 3 months' time in Q3 to turn all of my rhetoric into numbers, and you'll be able to see these financial returns for yourself. High revenue, low costs, and that pre-feasibility study will demonstrate those numbers in a few short months. Sarytogan Graphite, ASX, SGA. Thank you. Thanks, Chris.
Thank you so much. We're moving on to a metal we haven't heard a lot. You can go either side, it does not matter. A metal we haven't heard a lot about, and that is tungsten. And I'd like to invite out Mr. Tony Adcock, who is the Executive Chairman of Tungsten Metals Group, to talk to us today. He's internationally experienced chairman, executive in banking, capital markets, fintech, mining, agribusiness, M&A governance, strategy, risk, non-executive chair, NED, and several listed private and NFPs, including EML, patient, and he's only 21.
I hope you can hear me well. On day one, Chrissy said to us all at the conference, make this a conference of engagement. So I wish to do so. You've all got mobile phones. You've all got ballpoint pens. I'm hoping you've all got lights on in your house from time to time. You may have power tools. In fact, you may even be in the semiconductor or AI chips business. And tungsten is in all of those things. It's part of our lives. It's ubiquitous and it's in everything. And I'd want to illustrate that today and talk a little bit about our company, the Tungsten Metals Group, but also talk about how critical tungsten is as a mineral. Let me introduce our company. Hopefully there's some sound there. Why the wolf? Well, part of tungsten is wolframite or scheelite, so we chose the wolf as a logo, but also because it was moving forward and it's growing faster and faster. So that's hopefully what we describe as ourselves. As with all investments, I'll put the disclaimer up there and get through that very quickly. Some minerals are more critical than others, and tungsten is recognized by most jurisdictions as a critical mineral of high economic importance, but still with supply risk. So along the bottom axis, you see the economic importance relative to other products. But on the left axis there, you see the supply risk. The supply risk exists because 96% of the world's tungsten comes from Russia and China. Doesn't leave much for the rest of the world. However, our company de-risks that supply chain because our plant is in Vietnam. Vietnam is a very friendly sovereign country. We are already in production, so we're growing revenue straight away. We generate concentrate from ethically sourced countries around the world, and we also supply globally through offtakes to approved nations. So from a critical importance aspect and from a supply risk, we de-risk supply chain. Now, why is tungsten so important? The importance of tungsten is really around the fact that you can increase the temperature of alloys. We heat tungsten in our refinery, in our production plant, to something like 2,800 to 3,000 degrees centigrade, so it's pretty hot. It also increases the hardness of those alloys without increasing the breakability of those alloys. So it's a very strong aspect to strengthen steel. And I'll talk a little bit later about this, but it improves the electrical conductivity of the alloys. Our target markets on the right-hand side of this slide are there to see, but traditionally, our company's operated in working in Japan with companies like Samsung and so on as people who take our offtake. But our focus going forward is also Japan, but also the USA and Europe, because the ferrotungsten stockpiles in the USA and Europe have absolutely declined, given the troubles in Ukraine and elsewhere. So it strengthens steel. That's a really important takeaway from this presentation. In terms of overall global dynamics, the points I'd like to make there are that the market sectors that we operate in are essentially primarily transport, mining and construction, industrial, but you can see energy and defence down at the bottom there. I predict that over the next 2 to 5 years, you'll see energy and defence come up to almost the top component of the market sector. And if you look at the right-hand side of this, the demand drivers, it's in the things I just described. It's in your watch, it's in your phone, it's in your car. So tungsten is ubiquitous, and yet many of us go, we don't know much about tungsten. So I'm hoping that I'm going to elucidate a little bit on that. It's in our everyday lives. The tungsten metal group is well positioned to capture the open market that China and Russia cannot supply. China's production at the moment is to supply its own demand. It needs to meet its own internal demand. And Russia, because of the war in Ukraine and elsewhere, has very low stockpiles. We get calls from Russia or other people involved with Russia every week, and we won't sell to them. That leaves the rest of the world demand in a very strong position for a company like ourselves. And if you look at the pricing of tungsten, at the bottom left-hand corner there, other than the COVID impact, which everyone experienced, you can see that the pricing is pretty consistent and the margins are pretty consistent, in this particular business. So we're very pleased to say that we're well positioned, in our opinion, to take advantage of that window in the market. And now tungsten is absolutely relevant in the battery technology industry. You've heard much about lithium, you've heard much about sodium, other batteries, sodium tungstate and so on. But there are companies like Nyobolt, where in the UK they're competing or complementing, I should say, with lithium and sodium batteries. The use of tungsten in Nyobolt's batteries illustrates a number of things. One is a higher charging speed, which is really important and will continuously grow, as the last speaker talked about. It improves the higher resistance to heat, so we get less explosions of lithium batteries and so on in our cars or bikes. And I mentioned earlier the high electrical conductivity. Tungsten as a connector with your anode or cathode improves that connectivity, but it also acts, if you want it to, as an insulator in the battery, say lithium, which reduces the risk of overheating. As I said earlier, when we talk about heat, tungsten goes up to 2,800. It starts melting at 2,500, so it's a pretty impressive metal. In his opening address, Scott Clements from Tribeca mentioned the challenges of financial models. We don't have that challenge. Our model is really simple. It's straightforward. On the left-hand side, we buy from exploration companies. We buy concentrate from exploration companies. We do something with it. We purchase that. We process it in our plant in Vietnam. We then move into the offtake agreements with clients, as I said, like Samsung in Japan, Mitsui and others. And the complexity is not the financial model. The complexity is in the alchemy and the experience and the knowledge required to provide high quality ferrotungsten. And we have that in our recognized world-class team. The company's strategy is to operate downstream in value add, and the products that we referred to on a few slides earlier, rather than upstream into exploration or mining. I'll never rule out going upstream, but the way we're operating at the moment, the value add is in downstream, and we de-risk exploration risk. This is our tungsten plant in Vietnam, in Vinh Bao. The bottom left you can see is our arc furnace, which goes up to 3,000 degrees, as I said. Various other machines, such as extraction and crushers. In the middle there, you see our plant itself, and around that plant, around the footprint we've got, we plan to expand into the sodium tungstate, which is the chemical version of the heat treatment that we produce. But we also have the ability to produce tungsten powder, which is a fine powder for tools and drill bits, for example, or other forms of tungsten that we would look at going forward. I invite anybody here as an investor or somebody interested in this particular market to talk to us at our booth. And if you're interested in visiting the plant, I can't guarantee we'll be in production when you come there because we run 4 to 6 times a year and it's a very intense process, but you're very welcome to join us. And whilst the model is very simple, we're already generating cash. The smelting process is complex and it's hard to reproduce. And I make that point very clearly. It's really hard to reproduce, hence our advantage. It would take something like 3 years to build a new plant, and it would be very hard to find the skills that we've got. Our production director, George Chen, is a global subject matter expert. His team, the team that works around him with Martin McQuaid, our CEO, are recognized equally as such as global experts. And our experience is in the specialized techniques to produce high-quality ferrotungsten. There's alchemy involved. The team watch the flame, they see how it's going, and then they decide when to pour it. So there's quite a lot of science behind it. Scott also used, when he addressed you in the opening session on Monday, he used a term I'd never heard before called friendshoring. I don't know if you remember him using the word friendshoring, as in offshoring. And friendshoring is interesting in the sense that our supply chain is de-risked as it is, but we only deal with companies and countries that we know, either through the Responsible Minerals Initiative or through the International Tungsten Agencies, which is a very close-knit network, or our own networks. And as you can see from here, we source from Australia, we source from Vietnam, we source from South Korea, we source from UK occasionally, Spain, Portugal, and West Africa. We haven't got to Kazakhstan yet, but there is a mine in Kazakhstan, and they like to talk to us, I know that. And our exciting journey continues because, subject to the Australian Stock Exchange, we look to list in May this year. We had approval in December to move forward into an IPO, and whilst we've been here in these few days, we've just closed off our pre-IPO capital raise. At least I hope to have it closed by tomorrow before I leave. The important thing about the company here, though, is we can produce 4,000 tonnes per annum in several years' time when we're in full production. Our first year will be about 1,350, 1,400 tonnes. By year 4, our EBITDA will be forecast, in our view, to be about something like 26 million Australian dollars. And we're an Australian company with a Vietnamese operation. We have an Australian CEO, an Australian COO, and a Vietnamese production director. And I think the important thing here is to emphasize that we de-risk the rest of the world's supply chain coming from Russia or China. It also is in our intention, and this is again subject to listing, it's our intention to get to reliable income streams and be a dividend-paying company as soon as possible. This chart just very briefly shows that we expect to submit our prospectus during April, and we expect to list in May, subject to the ASX. In summary, we're raising $12 to $14 million at IPO. Our enterprise value is about $29 million. Most of the bulk of the funds is spent to buy concentrate. When we buy concentrate, it's about $5 million a time, I should say, not a ton, $5 million a time. And our plan is to do back-to-back production runs starting in May. And then we'll reinvest those profits for the first couple of years before we do pay dividends to grow the plant into the tungsten bars or into the tungsten powders that I mentioned just now. When we do list, what are the factors that might influence us? I think the important factors that will influence us will be a rise in the market price of ferrotungsten. We can increase the number of production runs that we take each year. The demand for ferrotungsten may expand because of the large storage device and the battery metal breakthroughs that are taking place almost daily. Going the other way, geopolitical shifts may impact us, but our ultimate intent is to list and declare a maiden dividend to shareholders at the earliest possible time. So just in conclusion, I believe, or we believe, and I hope I have convinced you that this will be a success if we get to IPO during May. So thank you very much to all of you for listening actively. Thank you, Stuart and team, for hosting us here. And if you do have any questions, please come and see us at our booth. Thank you.
Thank you, the Wolf. Now, in 2023-24, the Thai government has actively pursued foreign investment for EV car and battery manufacturing, including the mining of lithium, which is great news for our next company to take to the stage. And only one of the good bits of other good reasons that Matsa will grab your attention today. The second is their Lake Kerry gold project. It's set to go from exploration to mining in the next 12 to 24 months, and it's in a stellar location in Western Australia, surrounded by some world-class gold mines. To tell us more, would you please welcome Mr. Pascal Blampain, who is the Executive Director of Matsa Resources.
Thanks, Chrissy, and ladies and gentlemen. Really pleased to be here to talk to you today about our key projects. As Chrissy mentioned, we do have gold in Western Australia at Lake Kerry, but today's presentation will essentially be about our lithium project in Thailand. There's some pretty rocks. The pink minerals, it might be a little bit, yeah, no, you can see it. The pink minerals are the lithium mica, lepidolite. You're welcome to come to booth 63 and see these rocks in person. Usual disclaimers, just a quick corporate snapshot, 480 million shares on issue. We're about 15 million market cap. 3 cents shares closed today, and our main asset, as I mentioned before, is the Lake Kerry gold project, where we have 936,000 ounces in resource at a grade of 2.5. We have Singaporean shareholder base representing about 25 million shares out of that 480, and they are largely backed through BNP Paribas. Moving straight into our project in Thailand, you'd all be familiar with Thailand in terms of its natural beauty. The food's exquisite, people are lovely. It's a terrific place. I guess what you may not be aware of is that in terms of the minerals industry, the geology is super fantastic as well. That there is a picture of a swarm of veins, of pegmatite veins that carry the lepidolite in the northern part of Thailand in Kanchanaburi area. So we class ourselves as primarily a gold project or a gold company with a twist of lithium, and this is what the story is about. We have an unrivaled package of land in Thailand, around about 1,700 square kilometres of tenement, largely in application stage, but those basically all under our name. In terms of Australian standards, 1,700 square kilometres doesn't sound like an awful lot. There's a lot bigger packages in Western Australia targeting gold, etc. But for Thailand, that is a super-sized tenement package. And I would say that's probably unrivaled in all of Southeast Asia. Now, in the backdrop of the Thai government, in terms of lithium, the Thai government is issuing massive incentives for the EV manufacturers of the world to come and make EV cars there in Thailand. Now, globally, Thailand is already one of the top 10 countries in terms of car manufacturing, but they're obviously diverting their attention into EVs for the future. They're also attracting the battery makers into Thailand to make lithium carbonate batteries, etc., in terms of the EV space. What they've recently recognised is that there is a lithium potential mining industry in Thailand, which is something that is relatively new for the Thai and in terms of the minerals industry in general. So having recognised that, there's a fair bit of push in terms of looking at integrating a fully vertical lithium industry in Thailand. And I guess the question might be, is it gaining traction? In terms of the EV space, it certainly is. Not long ago, Tesla went to have a look at Thailand in terms of potentially setting up a factory there. Last week, BMW announced that they are setting up an EV factory in Ranong in southern Thailand. So in terms of the government initiative for the EV space, and now looking at the potential for generating, exploring and mining lithium in Thailand itself, this is where it's good news for Matsa. You'll see there a number of pictures. We have quite a number of prospects that are outcropping. We have been doing some work on that ground, and we are working our way towards getting government approvals to go out and do some drilling on those projects. We have regular meetings with the Mines Department, and we have met with the Prime Minister's office there as well in terms of what our project could do, and then how to sort of fast track the approvals process to ensure that we can get out there and do some of that drilling. Our project is largely centred on the Western Granite Belt, which is about 800 kilometres of strike all the way along that western border. Traditionally, it was a tin prospect, and not that long ago, Thailand was the fourth largest tin producer in the world. You can see there in terms of some of those orange shapes, those are all our tenements and our key project areas down here at Phang Nga and up there at Kanchanaburi. We've got a lot of ground there, with a lot of ground to do, a lot of work to do. What's really pleasing in terms of the lithium industry, well, the lithium potential in Thailand, and certainly for Matsa, is that every one of those pictures that I showed you before is a lithium discovery. None of those had been recorded anywhere in past reports or geological surveys, and we're very, very pleased with that. Broadly speaking, in terms of pathway to mining, it's like everything else. You have to get your tenements, you do the exploration, you do your drilling, you create the resources, and then you take them through feasibility works, etc. Last year in December, we issued our first two granted tenements, SPLs, down here at Ratchaburi, and there's a couple of targets there that are ready to drill. We are now also pushing for a couple of tenements up here at the Chokti Panther. Just some pictures in terms of the outcrop. This is at Ratchaburi. You can see there the picture on the left-hand side, some fairly coarse lepidolite material, and that there is what they call a LIBS unit, which you can get on the spot readings in terms of lithium, the lithium percent in the rocks. Over here, this next one is further up north at Kanchanaburi. It's basically a mountain that's about 100 metres tall, 50, 60 metres wide or so, and it's riddled with lepidolite. Next door to it, another one there again, that's about 80 metres wide, and again, it's riddled with lepidolite. We just need to do some drilling on those. Again, that one there is the Pink Panther, which is further down south in Kanchanaburi, and we collected about 30 kilos of sample of that one, and we took that to China to do some test work. Further down south, down at near Phang Nga, which is in the Phuket region, we have a number of stream sediment anomalies, and you can see there in the blue circles, they're key targets for the future. As I mentioned, the lithium is centred on that western granite belt. Technically, lepidolite can produce a lithium concentrate of 7.7% if it was pure lepidolite, and that's an important thing to note. Lepidolite has traditionally been downplayed, but certainly it has the capacity to produce a very good concentrate. And we did do some test work, as I mentioned just before, with a company called Yongxing Materials in southern China, who currently mine and process lepidolite and produce lithium carbonate to a purity of 99.81%, which is better than benchmark requirements. And importantly for us, the metallurgical test work there demonstrated a better than 95% recovery of lithium from the lepidolite. As I mentioned just before, with regards to our test work, China is the only jurisdiction at this stage that produces lithium carbonates from lepidolite, but I think that will change in the near future. Those are the test work results. We've achieved up to 97% recoveries. What's also encouraging is you can beneficiate lepidolite or the pegmatites that contain the lepidolite, and one of our samples actually concentrated to not 5.9% lithium oxide. Now, the benchmark Australian high-grade stuff is 6%, so you can see we're not far off, and this is a lepidolite product. Another important aspect is what sort of price range exists with regards to lepidolite. Now, this is a little bit tricky because the only market for lepidolite at this stage is China, because that's the only place where lepidolite is processed. But importantly, for an equivalent grade of 2 to 2.5%, lepidolite actually has a 33% premium against the spodumene equivalent, which is very encouraging for us. So I think in terms of the lithium space, there's a new frontier developing in Thailand. And I think in terms of the mining industry, that's going to substantially change the landscape there as well, with strong support from the government. We've been in Thailand for over 10 years, so we're well established there. We understand the people and the culture, and that's a very important practice. Very quickly, I just want to talk to how do we expect to fund our ambitions. There's a project called Devon Pit in Lake Kerry. We plan to put that in production this year. It's only going to have a mine life of about 12 months or so, but it's going to produce 40,000 ounces. And at today's gold price of $3,300, that's a good injection of funds into our company. Ladies and gentlemen, thank you.
That was a very good summation. Thank you very much, Pascal. I'd like to welcome Mike Finch up onto the stage now. He's the Head of Strategic Initiatives for Benchmark Intelligence, and he's responsible for developing research into supply chains associated with the energy transition for Benchmark. He broadens the company's data and information offering to cover that of copper and rare earths alongside the clean technologies of wind and solar. So today he's going to share his insights gleaned during his tenure at Benchmark, and he's going to talk to us about the outlook for critical minerals enabling the energy transition. Welcome, Mike.
Thanks, Chrissy. Good afternoon, ladies and gentlemen. As we stand at the precipice of a transformative era in global energy, it is my honour to address you today at the Future Facing Commodities Conference in Singapore, and a big thank you to the event organisers for inviting Benchmark and myself. My name is Mike Finch, as Chrissy mentioned, Head of Strategic Initiatives, and it's with great enthusiasm that I delve into the pivotal topic of the energy transition and the indispensable role of critical minerals, of course. Now, the world is undergoing a profound shift towards sustainable energy sources, driven by the urgent need to combat climate change and ensure a resilient energy future. This transition, however, is not merely a shift in power sources, it's a comprehensive reimagining of our energy landscape. At its core lies the indispensable role of critical minerals, essential components that power the batteries, fuel cells, renewable energy technologies driving this transition forward. Simply put, or to look at it another way, without mining, there'll be no energy transition. Without collaboration, no energy transition, no recycling, localized refining, no batteries, no accelerated permitting, and also no copper, no energy transition. Now, whilst we won't be discussing copper too much today, no material, in my view, is more critical to the energy transition than copper. Mass electrification is key to energy transition, and vast amounts of copper wire will be required to build out the infrastructure needed for electric vehicles, solar, photovoltaics, and wind. Now, this is all going to need huge amounts of new material, and concerns mounting over whether the new supply can be turned on quick enough to actually meet that demand. For this reason, Benchmark have actually branched out and are beginning to cover the copper markets. We're going to be providing critical supply, demand, and pricing information into that sector, and we're launching a free copper newsletter in Q3 with a view of taking a full-blown copper service or launching that in Q4. So if you're interested, please do let me know. Now, when we talk future-facing commodities, I think of Benchmark. We cover some of the most essential or critical commodities when considering the energy transition. We stand at the forefront of the revolution, providing unparalleled insight and analysis into the critical mineral supply chain. From lithium to cobalt to graphite to rare earth elements to copper, our expertise illuminates the intricate dynamics shaping the global commodities market. We're the world's leading PRA, setting the industry benchmark and reference pricing across lithium, nickel, cobalt, graphite, anodes, and cathodes. We provide detailed supply and demand forecasts alongside cost models in scenario analysis. We have an in-house consultancy team and also a 20-plus strong events team who are actually organizing a free-to-attend seminar in this very building, I think, on Tuesday, the 16th of April. So if anyone's interested, please check the website out. Onto the agenda briefly. I just want to provide a bit of sort of scene-setting information, look at the energy transition and the associated minerals to that. We've talked a lot about the raw material price weakness, and again, I just want to dive a little bit into there, look at what happened and how Benchmark see this evolving over time. I'm going to focus on some more positive sort of fundamental demand outlook as well, because it is strong and it's growing, and then finish with a little bit of on the investment side, just look at how we're going to plug that gap essentially. So let's look at last year. How well did we transition? I think these numbers were mentioned. Joe brought this up, 13.8 million EVs and plug-in hybrids sold, a fantastic number. We actually surpassed 1 terawatt hour when it comes to batteries produced last year. If we look ahead to the coming year, we're looking at 1.3 terawatt hours of lithium-ion battery demand as well. On the renewable side, China installed 293 gigawatts of solar and wind capacity on their own. That's equivalent to the entirety of the US stock as of January 2023. These numbers are massive, and it's not representative of the doom and gloom that we might have been hearing in some of the sort of news outlets. Let's put some growth rates on that. 30%, 20%, 50%. These numbers are extreme, and I think anyone in any industry would be happy to hear this. So it's not as bad as perhaps people are making out. Now, when we look at the energy transition, we've obviously got the electric vehicles, solar, wind. We've got the platform technologies that enable that, of course. So whether it's lithium-ion batteries, alternative batteries, solar PV, and then we've got a whole suite of critical minerals. These are what is unlocking those platform technologies, feeding into that. And without that, simply, we just wouldn't have any of this. I'm going to cover just 5 of these today. Benchmark cover that whole suite of minerals in some form or another. But focusing in on those 5s, and it's always important to think about the why. Why do we care about the critical minerals? Well, of course, I'm going to frame this in when we're looking just at EV economics. And of course, they're super important, and it drives that. If we look at a NMC 62 sell price back in Jan 2023, at the start of the year there, 70%, that was the equivalent cost of the bill of materials. So the anode plus cathode materials going in made up 70%. On the right-hand side of the chart, we can see Benchmark's view for global weighted average sell prices on a $1 per kilowatt hour basis. And that was around $103 per kilowatt hour. We've seen some steep progression there. But let's take a look at what happened as 2023 progressed, when we saw the impact of the critical minerals price falls and what happened. So I'm just highlighting what we got here, 6 6 odd price series of benchmark tracks, so across lithium, nickel, manganese, cobalt, graphite, naturally synthetic. And of course, all of them fell last year. We saw obviously lithium hydroxide has been mentioned before, or carbonate, I should say in this case, down 80%. To be fair, it had the furthest sort of to fall. So a weak year if we're just looking at raw material prices. Now, what's the impact of that when it comes to looking at cell prices? Well, of course, if we take that same NMC cell, so 62, in Jan 24 this time, it's actually going to make up only 51% of the cost of that cell. The impact, if we were to then look at global average weighted cell costs, our January and February, and I believe even our March assessments, hovering around the $80 per kilowatt hour, which is crazy. I never thought we'd quite get down that low. Good for the consumer. It's made EVs very competitive. There had to be some price cuts to incentivize sort of purchases there, and we're fast approaching parity with ICE vehicles, but it can cause a little bit of pain for people like yourselves. But the important thing to mention is the sky really falling, and I think we've used the word falling a couple of times across yesterday and this morning. This is showing just 2 examples, as Joe was mentioning. There's many examples of a lithium price, but 2 here: hydroxide and carbonate CIF Asia. And if you've only been in the industry for 1 year, that's not a pretty picture, is it really? But as we start to unravel more and more history, keep going back all the way to Jan 16. Let's say you've been in the industry 8 years. it doesn't start to seem so bad when you look at actually where we are at. If we take the 5-year average price prior to that 21 to 23 rally of sort of 1,300, 1,400, we're actually above that, and it's not too bad at all. And Joe's mentioning some different prices, SQMs. Exactly that. It's not actually as bad as perhaps everyone's making out. So to build on that, and then to perhaps start moving into the more positive stuff, we can look at that longer term or mid-term, long-term sentiment, and look at some of those fundamentals that underlie that. So if we look at EV sales, set to grow 14% CAGR according to benchmark out to 2040. If we look more holistically at the energy transition, we're looking at maybe 4 to 5 trillion required every year to finance that. Admittedly, that is on a net zero pathway. I'm not suggesting we would get on that pathway, but it's just to give you a flavor of sort of how much is actually required. And of course, why is that important? Because obviously, the energy transition is very intensive when it comes to critical minerals. There's no better example than when we look at wind and solar. Now, Benchmark's new analysis, and we have the capabilities in-house now to do this. We're forecasting wind capacity to grow between 7 to 10x. When we look at solar, 13 to 15x out to 2050. So what does that mean? Why is that important? If we just take copper as an example, copper usage in typical fuel sources or energy sources, such as natural gas or coal, it's only about 1 ton per megawatt or 1 kiloton per gigawatt, okay? How much copper actually gets used in that. You take offshore wind, that's 8 to 10x as much copper. If you take solar, it's around 3 to 4x, so far more intensive in critical mineral usage for these clean technologies. And as we've sort of previously mentioned as well, to unlock all of this, we're gonna need to see a 4 to 10x increase in supply across different critical minerals, 10x being lithium, 3 or 4 being perhaps more in the region for nickel and cobalt. So to take you on a quick journey then across some of those key critical minerals, I'll look at our sort of supply and demand numbers, or our balance essentially. So on the lithium side, taking our weighted mine supply, so including all those possible and probable projects and weighting that. We stack on top our secondary supply and we overlay our demand base case. And we've seen these numbers in various different forms. Joe this morning mentioned it as well, but we are starting to move into deficits as we get out towards the end of the decade there. For nickel, the story is pretty similar. We're going to see actual surplus over the next couple of years, and perhaps a little bit more or a weaker price environment than perhaps, let's say, lithium. But again, we're looking at nickel demand outstripping that of supply, around 7% versus 5%. For cobalt, 8.7% when we take a CAGR for demand versus supply, moving into sharp deficits towards the end of the decade. Now, phosphorus doesn't often get mentioned, but I'm happy to say Benchmark now cover this critical mineral. So if you are interested, let me know. But we're seeing phosphorus demand in batteries to increase 28-fold between 2020 and 2030 as well. One of the things actually skipped over was our outlook for prices. And we think the question is, has the floor been reached? We're very much in agreement with Joe. I think on the lithium side, there or thereabouts, yes, maybe some slight increases as we go out for the remainder of the year. Nickel and cobalt, a slightly different story. I think we are at the floor, but I think it might be a bit of a rougher ride for those two, given the excess supply that's in the market currently. Now, to talk copper very quickly, the number I want you to focus on here is that circle and the number in that black circle. That's the share of copper demand that's going into clean technologies. It's around about 20% in 2022, That's set to grow up to 30% towards the end of the decade. And this is a big market, copper, and that's huge growth. A nice stat I always like to pull out is copper is 4 times, or has 4 times more copper in a battery as opposed to lithium on a weight basis. So it's very intensive batteries for copper demand. EV wind and solar alone is set to account for approximately 4 million tons of copper demand in 2030, and we're looking at a 9 to 10 million ton increase by 2030 as well. So what does that mean? Looming supply gaps are on the horizon. Yes, substitution can play a role here. Yes, thrifting, I think that's going to be really important when we look at copper usage in EVs. I think that's going to come down a lot more than people expect. And of course, recycling. But is it enough to offset those sort of looming gaps, supply gaps? No, it's not. What do we need? We need more investment, and we need it now. So another way to look at this is some work the benchmark did at the end of last year. And this is just looking at what would, on a CapEx basis, be required to actually plug that gap. We've come up with a number, 582 billion, huge number. We split it between upstream, batteries, and downstream. I think an easier way or a better way to look at this is actually what's been committed versus uncommitted, okay? So in the yellow, we've got committed CapEx, and in the black, uncommitted. And we can clearly see here, and we kind of split that midstream, downstream versus upstream. Of the 200 billion that's left to be outstanding, yet to be committed, that's actually 75% is on the upstream side. So lithium, nickel, cobalt, graphite, copper, aluminium, even if we want to include that. So that's where the investment needs to go, especially given the mine lag times that we've talked about. So 15 years on average can range from maybe 10 in China. It can go up to 20 easily. So that's where the investment needs to go, and it needs to go now. Another good way to look at this, and we like this graphic of benchmark. I think it's very visual and good just to have a quick snapshot. But looking across lithium, cobalt, and nickel, if we were to take sort of the average CapEx required to build a mine, we look at the average size of said mine, it's pretty simple for us to work out how many mines or additional mines are needed out to 2030 to actually make this all happen. So we're looking at 74 additional mines in lithium, 62 for cobalt, another 72 for nickel, and then additional, if we were to factor in lithium metal solid-state batteries also. So the important take-home message that I want to leave everyone with today is the fact that the faster we accept new supply won't come at a lower cost, the faster we will unlock that much-needed capital. I think higher incentive pricing is needed to ensure diversified and sustainable supply, and new supplies will have to come from a higher cost source of production. Those marginal producers, facilities that perhaps aren't that attractive initially, that's where we need to unlock, and they're going to be the ones that will carry us forward as well. So to conclude, nicely on time, 2023, yes, we did see a lot of raw material price weakness. We believe a floor has been reached by and large across different commodity areas, and we're going to see them either move sideways, be range-bound for a while, or start to improve throughout the course of this year. The outlook for major demand drivers remains very strong. It's never really changed. I think those growth rates, they undershot crazy expectations, but they're still very, very healthy. Significant investment in CapEx is required to help stem that supply gap, which is forecast to grow significantly between that 2030-2040 period. And high long-term incentive pricing is required in order to do this. Now, one thing that I didn't really mention in my PowerPoint presentation here, but it's really important, is the fact that we expect recent trends of onshoring and friendshoring. Integration also, if we're looking at vertical integration at OEMs, that will persist deep into the decade as the need for supply security and a drive to sustainable supply will dominate. And that's me. Thank you very much, Chrissy. Thank you.
Thank you very much, Mike. Insightful as always. Now we've got a panel session to wind out this particular portion of the show. Oh, look, you reminded me of my duties as an MC. Please remember to turn all your mobile phones to silent. Okay, thank you for that late reminder. So we have a panel session now to wind out this particular portion. We've got one more panel session today, and that's going to wind us up, take us to 6 o'clock. And of course, you're all welcome to stay with us and enjoy some drinks and some more networking as well. So I have Abby Lee, who is the director from Acacia Executive Search Panel, performing the duties of moderator for this session, and she's joined, Abby, I'm going to let you introduce everyone. The topic is diversity, moving from why to how. Will you please make them very welcome, everyone?
Thanks, Chrissy. Thanks for joining us on this afternoon's panel. Topic is diversity, moving from how to. Well, I guess when you're talking about diversity, it's been such a huge topic in the industry, and companies have come a long way in terms of achieving it, but we really want to talk about, now that you have achieved it, like how can we best nurture it and ensure that companies are really, holding on to their diverse workforce. I think when you're looking at investors, certainly diversity in their management teams is a huge part of their capital deployment. So we want to make sure that, companies here today are also considering some topics that we're going to talk about. So I just want to introduce my amazing panel today. We have to my left is Anna Shea, the Director Innovation at RCF Capital. Most recently, she worked as part of the management team and the Australasian Alternatives Fund in various roles with FMG and New York as an investment banker. Her varied background and expertise in both investing, advising and capital raising for these stakeholder groups place her in a unique position to have a broad understanding and how various capital classes can support mining companies through their various stages of growth and innovation. Next, we have Purnima Gandhi, who has over 15 years of global experience in investment banking, private and public equity, focusing on energy and climate technologies. She's been with the investments and portfolio development team at Temasek International in Singapore for 11 years, and prior to this, she was with Citigroup in energy investment banking in London. Last but not least is Graham Alverson, the CEO for Australian Vanadium. Recently completed a merger and intends to be the 4th vanadium producer in the world. So Graham's strong project development background, and particularly in future-facing commodities such as vanadium, lithium and nickel, I'm sure he's certainly the man for the job. So just to kick off with our first question, I'm going to have Purnima answer. I think in terms of investment banking and diversity, being in a senior female leadership role is probably one of the hardest things to achieve. So I would love for you to just share with the group your experiences in diversity and your views in general.
Thank you. Thank you for the ones who are sitting here, because I know there's great coffee outside, or not so great according to Aussie standards. But I think just in terms of, maybe I can use an example of what I actually was facing today. So I got up in the morning ready to take out my formal suit to be wearing on the panel. And I thought to myself, how is a suit appropriate when I'm talking on a diversity panel, which is as much of a corporate uniform as we can get? So I said, why not wear something formal, but from a different culture? But I can just tell you that me wearing this sari today has taken a lot of effort. And I'm sure when I walk into the room or talking to people, the questions are, what's she going to say? Is she too different? She looks different. And I can tell you that how I felt different today versus when I was here at the conference yesterday. I felt self-doubt. I asked my husband probably 5 times before leaving the house, are you sure? Are you sure? Finally, he was like, just get out. Like, stop asking. And to me, it was almost like, turned out to be a little bit of an experiment by the end of it, that I was asking myself more questions, doubting myself, lower confidence than even just yesterday. And so, to me, I think that's what diversity and inclusion is about. It's about that feeling that you could be visually different. It doesn't have to mean just you're on a gender lens. It could be neurodiversity. It could be orientation. It could be whatever it is. You're different from the majority in the room. And how does that make you as an individual feel? But how does it make other people in the audience or who you're interacting with feel? And therefore, companies, whether it's financial institutions or others, have a very hard task, because sometimes just being same is easy. You play the same sport, you do the same thing, it's easier. In this case, you have to make that additional effort for companies or the majority to sort of take that one step forward to make you feel included. And for the one who is slightly different, to take that one step out, to try to be a part. And so it's that sort of a diversity and inclusion. In essence, today I understood it. It just means it's a two-way relationship. And both need to sort of make that effort. The rest we can talk about in terms of the policies, et cetera, et cetera. But that was my sort of learning from today morning. But in terms of the financial sector and what you asked, I think most of us have come here despite the sort of organization, not because, but I'm just hoping that we can actually put in some things which make it easier for the next generation to come through.
And I think they're amazing points, because when I saw you today, I didn't think anything different. So it's definitely an internal mental thing as well. I think with diversity, it's very much a conversation around diversity, equity and inclusion, and the things that you spoke about are very resonant to that. And you've got funds like, BlackRock, Perennial, that are actually putting out targets as investors, looking at ASX 300 companies. I actually want to see it happen, particularly at a board level. So I'm keen to get your view, Anna, in terms of the roles that you've, currently with RCF Capital, in terms of when you're looking at, companies and teams, how do you assess diversity, and how, what does good look like?
Yeah, thanks, Abs, and thanks for having us here today, and to everyone in the crowd. I guess I start from fundamentals. It's partly my training, but also the way that I see the world. So change requires change, and change is inherently uncomfortable. So if you start there and you say, okay, well, how are we going to evolve as opposed to a revolution? We have to just try things that are different. And probably how I've ended up in an innovation strategy, because we like to try different things, whether it's new technology or other. And so when we're thinking about what our role is in the capital markets, we're custodians of capital for large pension funds around the world, for endowments, for foundations, some of whom are probably your investors as well in the crowd. And they say to us, well, our expectations are X or Y, and that may be around a number of things. It would be investment returns and all the commercial elements, but also how do we make the world a better place? How do we generate a better outcome than where we are today? And so as custodians of capital, we look at both the qualitative and the quantitative KPIs, I guess. And part of what we do when we go in and we're looking at new companies that we're going to allocate capital to, we'll say, well, how different is this group to the next group? And it's an opportunity cost. And so if there's a group of folks over here who look different, sound different, have different ideas, have healthier, more robust conversations as a team, we know that higher performing teams will have a higher level of diversity, and that equals higher revenue, higher profitability. And so it's all about creating value, but doing it in a way, I guess, where you can tie it back to, what makes a good team and high performance.
Brilliant. So, yeah. And it's, Graham, I want to talk about you because Australian Vanadium have a 50% gender diverse board, which is so fantastic. What is Australian Vanadium's view on diversity, and how do you achieve it?
Sure. First of all, it's a privilege to be here with speakers who are far more elegant at explaining these topics, but I think what we have at AVL truly is unique for maybe the class of investment we are. And I would just say that how it came about is not necessarily a focus on diversity, but on a methodology for our business that, to me, the outcome is diversity because of the principles that we deploy. And for me, the way I liken it to is, first of all, you need a chair is an absolutely critical element to achieving that board diversity who adopts, I would call, modern principles. And I'll liken that to my experience at IGO, which I felt was a relatively strong leader in diversity. And there I had this wonderful privilege of participating in the strategy that was deployed at IGO and got to know the people who came up with that strategy. And behind that, there's a person named Mark Stigter. He wrote a book called Boards That Dare. And he was fundamental in the late Peter Bradford's work there and helped them create that outcome at IGO as well. We have Mark working with us at AVL, and what Boards That Dare, in terms of a framework, tells you is that instead of the traditional sense of finding people for boards, or in that case, management, right, that are just doing the basics of they have the abilities and maybe the background and the skill set and maybe the industry that matches it. What his book says is that boards that dare look for people who they have the ability, they know, they have the knowledge. Those are the basics that I think are often deployed and maybe end up putting people on boards who are all male, middle-aged people who are maybe metallurgists or something. maybe mining engineers, and it limits you. But the rest of the spectrum is not considered, and I think good companies, and I think this is why, if you've got a chair like our Cliff Lawrenson, he thinks this way. He sees his job as curating boards, not just with the can and the no, but the want. There has to be that strong desire to do big things and be bigger, and the R, as in your actual being, is such that you're there. And then lastly, but most important, is dare. And so our board, for example, they're each issued a copy of the book Boards That Dare, and in it, Mark, and I think this resonates with what Anna was saying, he always signs his book and it says, courage and comfort will never be friends. And I think this is all about change. And when you try to adopt those kind of principles, it's very uncomfortable, and it's setting the bar very high. And in our case, we ended up with a 50% gender diversity. I think we just end up with diverse opinions and people purely because we subscribe to getting people that have all of those elements, not just the no and the R, or the no and the can. Yeah.
Fantastic. And I think when people do preface diversity as it just being a gender, and it certainly isn't, there's so many contributing factors. You spoke earlier in the week around your executive team. So not only at a board level, but just going down to that actual, more management executive level. What does that look like in terms of being diverse, and how do you ensure that you're, creating a platform for everyone to feel comfortable and be able to, talk about their diverse opinions and thoughts?
Sure. I think I'd first start by being humble and saying we've got a long way to go. Like, we are fostering the platform where diversity is where it needs to be, and I do think we're leaders in that respect. I think, again, at the starting point, at the outset, it comes down to if you're serious about doing good business, diversity is the outcome that will happen. And if you deploy the right principles, you're going to look at those elements I spoke about. And for example, if there's people on my team where on their CV, instead of just having the skills and the aptitudes for the role, they have things like pride professional mentoring, and those things, you almost by necessity end up with people who have very diverse perspectives, thoughts, and they have all those basics that you need to, in terms of skills and knowledge, but you then have diversity of thought. And I think as an executive team, we are not truly diverse on a gender basis, but our team has, in terms of nationalities, every single person basically is from a different country, a different upbringing. And so I think by deploying those same principles, you do end up with that outcome of very significant diversity of thought. And you mentioned creating comfort, I guess, and it is about psychological safety, but I would just highlight that change is uncomfortable, and so we have some tools. Like, one of the things that actually one of my executives in my team taught me many years ago at IGO was that to do these things well, and what the world needs more of, is hard conversations. And so someone like me, who's typically an avoider of conflict, we subscribe to this principle that the conversations you least want to have are the conversations you most need to have. And we actually write it on our whiteboard, and I try to make sure I have those conversations almost on a daily basis. And I find if you've got a team who is subscribing to that principle and willing to have hard conversations, it may be uncomfortable, but psychologically safe, and that's the platform that you can build that strong diversity in, where you can feel comfortable in that sense that your opinions are valued.
So Anna, I'm keen to hear from you. What can companies do in terms of when they're actively engaging a diverse workforce and it is quite new to them? What advice would you get them just around getting maximum, that maximum comfort level for teams? So management may come in and it may not be common to them in terms of different cultures, different age groups, gender, everything. What advice would you get them to be able to manage that team effectively and bring out that diversity in the best way possible?
Yeah, so at the risk of using a sporting analogy, I will, because it will hopefully resonate with a few people in the room. I mean, part of what we do in private equity, of course, is go in and help companies that might be doing okay, but really want to lift their game and or create value for their shareholders to do more. And so part of that is often around organisational assessment and review of the people and the talent and what they're hoping to achieve. So if you start with, I guess, the goal or the North Star where they're hoping to get to, that's always a good way to get everyone aligned and united. And so we'll sort of flesh that out. And then we'll talk about, well, what are the inputs that you need to get there? And inevitably, it's always a question around the people and the types of expertise that you need to get there. And we will talk about, you know, well, if I was going to go and play a basketball game or a football game, you would never have 5 centres on a basketball court. You know, you need a running guard, you need, you know, point guard, you need someone in defence. And so I think if you can sort of normalise some of that and say, okay, well, for an innovation company or a technology company, we absolutely would like some software engineers, but we'd like people who've had different backgrounds, different experiences. Often now in software companies, some of the best coders are age 20, you know, and they have a lot better skills than some of the folks that have been doing it for 20 or 30 years. So from a diversity of age, it can be quite interesting, those conversations. So we really basically line up and say, okay, well, this is where we are, this is where we'd like to go, what do we think we need to get from here to there? And we fundamentally believe part of that input is the people and the types of people that you can bring. And it's not always about the CVs or, you know, does Anna's CV perfectly match the role she's going into? It might be that I'm a better communicator than others, or that I get joy out of solving problems. And I think some of those kinds of skill sets and a little bit to what Graham was saying can be super helpful if those people in the position of hiring and or influencing how the team evolves are open-minded in that way.
Decorated career in financial banking, you've paved the way and you've gone into a senior leadership role. How did you manage, I guess, the lack of diversity within the industry and really paved your way in that career to get to where you are today?
Sure. I think I quoted this yesterday. About 10 years ago, I was at an energy conference in Houston. And someone said to me, don't worry, I'll find you easily, you're the only brown woman in the room. Unfortunately, it's still pretty much the same situation. I was hoping it was different. Like, for example, last night I was looking around, and I was like, oh, actually, 10 years hence, we're still pretty much in a similar situation, which is not a good sign. And it means that, yes, we do the talk, but there are things that we need to actually implement. And not implement for the sake of, yes, checkbox, we've done our ESG report, we've done the woman on the board. That's a very compliance attitude. It's about actually, if you believe that yes, your diverse teams will be better teams, you'll get better outcomes, then what can we do about it? And actually at Temasek, a few of us started the Temasek Women's Network last year, 2 years ago. And it had 3 key pillars. One is mentoring the women in the team, across the organization, mentoring the women. And again, someone can say, why only the women? Of course, it should be everyone, ideally. But just by today morning's experiment that I had, if you are feeling that sort of self-doubt, it helps to have a mentor just discuss and share with you how to navigate the corporate sort of ecosystem. The second aspect was just about inspiration, to show people that you can do that, you can achieve that. And for that, we started getting senior women in Singapore, as well as sort of like Singapore entrepreneurs. So it's a bit relatable that someone who went to the same school as me or same university as me has managed to do this. So we got some of the founders of a fashion company, of a chocolate company, of various different companies, but local Singapore entrepreneurs. And then we also started getting, for example, Indra Nooyi, who's the former PepsiCo CEO, to come and speak. So to say what's possible, you can also be a CEO of an MNC if you just dream big enough, and they've also gone through their own journey and struggle. And then the third part is more about the training and the workshops, and if you're not confident, how do you speak publicly? How do you network if you don't like networking? Things like that. So those were sort of some of the 3 key pillars of the Women's Network that we started. And one of the most critical things, and I'm glad that Graham is here, is it's not women for women. You need the male allies because that is still the majority. So how do you actually rope them into being part of this? So actually now a lot of, we asked the senior management who would volunteer to be a mentor. And now, so actually a lot of our mentors are senior men who have volunteered their time to be mentors. The other aspect I just want to bring about is research has shown that you will hire someone who looks like you. And they've done all this research that they put a curtain and then you try to hire. If there's a curtain you can't see, you can't, if it's just without the visual, you will actually hire a different person than with the visual. So based on that, we've tried to have more diverse interview panels. It's unfortunate that this is there, but now that you know the research is there, how do you actually tackle that? So we're hoping that diverse interview panels sort of help break a little bit of that unconscious bias that we don't realize.
When we did catch up, we talked about the diverse interview panels is such a great example of how. And I still believe that like diversity, equity, and inclusion is certainly not going away. It's DEI as it's referred as, and it's an ESG reporting standard now, and it's something that needs to be implemented at a board level strategically as well. But would you say, from your experience, Graham, coming from a larger company versus being in a junior cap company that's really has a really strong growth strategy, is it easier to start with a bit of a clean slate?
Yeah, look, I think there's an interesting case study in our business that maybe bigger businesses should look at, in that I think there's two elements to our business that are very interesting this is all about enabling change, right? And there's this momentum that stops change happening, and in a smaller business, you can affect change much more rapidly. So in the sort of 16 months I've been with the business, we now have a board that probably looks very little like it used to, and we have an executive team that looks different. And there's a bunch of lessons in there for implementing DEI. But I think that at the heart of it is that change is possible. And when I reflect for my sins, I seem to be someone who is a fix-it guy in businesses, and I've been surprised to the upside that even in bigger businesses, there's a strategist, his name is Richard Rummelt, and he wrote a book, Good Strategy, Bad Strategy, right? And he basically says that change can happen swiftly in any business, and it is just upper management that gets in the way of it, right? And in these fix-it jobs, I've always had anxiety about changing people, right? But the reality is when they're removed, change is incredibly fast. And so for AVL, it's been a story of not so much that as just implementing that philosophy that I spoke about earlier. But in past experiences, even in bigger businesses where I have had to, with a team of people, correct people issues, let's call it, the change just happens so quick when you remove some of the, like, one or maybe two people, right, that stand in the way. So yeah, AVL's had some advantages that were small. The fact that we're changing the phase of the business gives you that platform, but I would encourage bigger businesses to ask yourselves, there's a tool that I use, it's called fear setting, right? And you sit down and you think about these good changes that can happen, and the nature of human beings is that we're very risk averse. So this tool is you write down all of the terrible things that could happen, how you might mitigate those, but the piece of risk that people don't look at, and when you flip the page over on this tool, it's what if you don't do it? And I think there's change that can happen so fast in all businesses with a bit of good decision making and courage. So in terms of Mark Stigter that I spoke about, you need boards that dare, and they need courage, and then you need management teams that follow that lead from the top.
That's a really great point to even finish on. I think to your point, you really can't underestimate the retention of people, particularly within these super talent short markets where, I could guarantee that a lot of the companies that are presenting today, if not already, will experience quite a large, skill shortage. And I think one thing that the future-facing commodity world actually offers is you can actually look at a whole diverse level of experience, because we are entering into commodities that are quite new. So there isn't like a 20-year experience lithium mine builder in abundance in the sector. So they're actually being forced to look at different skill sets and how they can still deliver on those outcomes of the role. But more so the diversity, the equity and inclusion piece, where people feel valued, they feel like they can be themselves, they really love working for the company. It's a high-performing company, but they also have the retention of people. And I just think from a recruitment perspective, it certainly cannot be underrated, because it's talent short, it's high turnover. Like, there's a lot of room for improvement in the sector, but your views today have been really outstanding, and yeah, I hope everyone got something from it. Thank you so much for your time.
Can I leave with one experiment based on what I did today? Once a year, if you just dress differently and go into your office, and then you just judge yourself. You are as capable as you were the day before. Just wear something different and just go into the office and see how you feel. And I think probably that will help you understand why diversity is not just a topic on paper, but you actually feel it, and you feel how someone who is visually different could feel. And I think then automatically all the policies and everything can sort of come once you feel it yourself. So I'll just leave it at that.
That's wonderful. Thanks, Prineas. Thank you.
Well, you've all finished very, very early, I'd like to say. Press. All right, I hope you enjoyed that conversation. It's provided you with some food for thought. They've given us very kindly an extra 5 minutes for afternoon tea, so use it wisely, have some conversations, and you'll hear the bell ring in time to come back in for our final session. And you're all welcome to stay and enjoy drinks with us, conference drinks tonight from 6 o'clock out in the foyer after our final panel. Thank you.